Hey everyone, today we're talking about becoming satisfied, building up your credit. My name is Isaiah Goodman, Chief Financial Advocate at Becoming Financial. Today, I wanted to make sure we talked about building up credit. A lot of my clients, millennials and Gen Z, they ask me about credit. How do I build credit? How do I improve it? How do I fix it? And one of the most important things is you have to be really thoughtful and be aware of how do you play the game. So today we're going to talk about a few ideas, rules, things that you can do to build up and improve your credit. Number one, it's just on-time payment history. The biggest thing is paying your bills on time, being pretty regular with all of your payments, making sure you don't go over 30 days late. Now, it may seem easy, but life happens, right? And sometimes what I've seen is if you get one late 30-day payment, then you're trying to catch up and you might be 30 days late again and again and again. Most important thing, just make sure you focus on maybe those 2 or 3 or 4 accounts that will actually report to your credit when it comes to late payments. So of course, this is things like student loans, car notes, any sort of rental history or mortgage payments. Those are the top ones that report. Any other sort of credit card or any other loans, those will probably report as well. So you have to make sure you pay those payments on time. If you have a long history of on-time payments, looking at 3, 4, 5 years of on-time payments, that's going to be the number one thing that builds your credit up. So if you work with a credit repair specialist and they promise all of these things about letters and removing negative reports, but they don't talk about paying your payments on time for the next 2 to 3 years, take a step back. Remember, you have to pay these things on time for a long period of time. So it's not going to be a magic sort of pill. Next big thing, credit utilization. How much of your available credit are you using? It's a lot different to have 1,000 on your credit cards out of a possible 10,000, available limit versus having 900 on your $1,000 limit. So even though one might be more than the other, it's how much are you using out of your available credit. For some of us, you might not have a credit limit. You might not have credit cards. You might not have a line of credit. And so that's actually something that it does pull down on your credit score, believe it or not. So you can go to the bank, ask for a secured credit card. You deposit or you give them a certain number, maybe it's $200, $300, $500, then they give you a credit card for that amount. Now their bank is secured by the down payment, and now you have a history of a line of credit or a credit card. Now that's great because now you have a utilization ratio. As long as you're keeping that under around 30%, that's going to improve and help build up your credit score. Next big one, hard inquiries. If you're applying a lot for credit cards or you're applying for loans all the time, those are going to ding your credit report. The more you see, the more you apply, it's going to hurt your credit. Now, there are some things like if you are looking for a car loan, that will be a hard pull, but within about 30 or 45 days, they start to see, oh, okay, he's applying for a car note. They're not going to start to add on and pile on these multiple inquiries. Derogatory remarks, anything like a foreclosure, an eviction, anything that went to a credit collector, it might have defaulted on the loan and they sent it to a creditor. You got to make sure you either get those removed or you work through a payment plan, and then after a period of time, those should fall off. Last two here. First one is age of credit history. If you've got a credit card that's open from when you were back in college, keep it open. That credit history, that length of time is actually a positive thing. Now, it's not the number one thing, but it is good to have something that's been open for more than just a couple years, because now they look and see at your credit history, have you been a responsible user for a long period of time? The last thing we'll talk about is just the total number of accounts. Believe it or not, more is better. So it's kind of a weird thing here, but if you've got a couple different credit cards, maybe a car note, a mortgage, that's actually good for your credit score. If all you've got is one credit card that has a $200 limit, that's it. That's all they have to go off of. So the more accounts you have, the more history you have, and the better you pay those bills on time, the more your credit will improve and grow.